Let's talk a little Chegg. Chegg shares soaring today. They're up 19%. That's as the online learning platform argues that ChatGPT won't be as detrimental to his business as initially feared. Our own Josh Schafer is here to explain what's changed for Chegg after a rough run since ChatGPT's launch. Josh, what happened on the earnings call?
Yeah, Brad, so it's an interesting story. You really got to kind of go back to last quarter's earnings to understand this quarter's earnings story when we think about the fact that this stock fell nearly 50% on earnings last time. So they came out for the first time and said, ChatGPT is hurting our growth rate, hurting the amount of people that are coming to Chegg because students use Chegg to learn more and help them learn online, right? So then they came out yesterday, and in this earnings call, it's really interesting to hear what CEO Dan Rosensweig had to say about ChatGPT. He said that students are now viewing ChatGPT and will continue to view ChatGPT as complementary, but not a replacement for Chegg. And I did a little bit of market research first this morning to see what he's talking about, right? So I asked Chegg a question, or I asked ChatGPT a question about Chegg stock. But what ChatGPT can't do is it can't answer a question beyond September 2021, the basic version of ChatGPT. So he's sort of arguing in the long run, you need Chegg because you need updated information, or you at least need an advanced version of ChatGPT, which I thought was interesting.
I mean, they're probably going to update it at some point.
No, they will. They will. But for now, right now, it's not a pure competitor, which I thought was a fair point. And then he also talked about those retention rates, and the retention rates have become more steady through the last couple months because retention rates were falling because of ChatGPT. They've seen that increase over the last few months, still down compared to before, compared to last year, but a lot of that they're also attributing to the pandemic, right? Remember, a lot of people started using Chegg over the COVID-19 pandemic with students at home, so they're still sort of dealing with tough comps there anyway. And then the other downside thing that we should highlight, even though the stock is up 20%, you still have revenue down 6%. I thought it was interesting. Our friend Brent Thill over at Jefferies pointed out that, the AI overhang isn't gone off the stock. It's just the stock has been beaten down so much. This was a $30 stock when ChatGPT was launched. It currently sells at $12. It was a over $100 stock at the peak of the pandemic. So I think what investors are probably seeing right now is if you can see a turnaround story in this name, then maybe there's some promise, right? Because the stock has been beaten down quite a bit. Brad, I see a little grin on your face.
Skepticism.
Skepticism?
I mean, it is still down more than 50% year to date, to your point. Yeah. So it's not, is there a happy medium between ChatGPT is going to put Chegg out of business and Chegg is going to continue and do what it's doing? Yes, probably there's some sort of middle ground there. Like is everybody just going to write papers with ChatGPT going forward? They're not going to need books anymore, and they're not going to need aids to learning? No, that seems unlikely.
I think there's so much. There's an assistance that generative AI can provide certain students in terms of being able to not just cheat, but make sure that they have an access to an additional amount or an augmented or additive amount of information, I should say, versus what is solely in a textbook, what is solely in a Chegg learning model, or what is essentially tapped into via those services. So yeah, they can coexist, but it's at what usership as well. Do you see a drop-off in those number of users that are either purchasing through some of the services or solutions in Chegg, and how much does that actually take a part of the valuation, a chunk of the valuation? We see that in the stock already.
Right, and the other thing that I was really stuck on last quarter was Chegg's solution here was to partner with OpenAI and essentially say, we don't have the infrastructure to use this. We're going to use the competitor's infrastructure to help us compete with the competitor, which from an investor perspective is never usually that good of a sign, right? That might be a sign that Chegg doesn't have enough going on with their current business. But it was interesting. So they actually have a new partnership now with Scale AI, which is not OpenAI and is not ChatGPT, and that's their generative AI play. So they're going to use Scale AI to build out generative AI with their own data, and they're arguing that ChatGPT and that partnership still exists, but that's going to be called Cheggmate, and that's just for conversations. And so they'll have a different generative AI play.
We knew this name. This is a fun one, though.
Did we know it already?
Cheggmate. Yes, Cheggmate's been out.
I guess I forgot, but I still like it. All right, thanks, Josh. Appreciate it.